Welcome back. Updater Services, that's the company on our radar. It's a new listing. The stock issue price was 300. It's currently trading slightly below that. It's a facilities management company, but other than that, they provide a lot of business support services, whether it's airport ground handling, whether it's some audit, to various other businesses, sales enablement. So they reported their Q1 numbers. This is for the April to June period. And to talk more about it, we are joined by the, company's... joined by the company's chairman and MD, Mr. Raghu Tangirala. Sir, thank you very much for joining in. Since it's your first result since the listing, your Q1 revenue growth is about 20-21%. Is that the run rate we should assume for the rest of the year? Because last year you did more than 40%.
Good afternoon and thank you for having me. Yes, these are the kind of guidance we should look at, 20-21% growth for this year. Last year, when you mentioned 40%, that was because of a bump because of an acquisition, inorganic growth. Otherwise, the industry average is about 10-12%. We still grow at about 20-21%. So last June, we did a revenue of about 479 crores for the last June quarter. This June, we've done 577 crores, which is roughly about 20.5%.
Okay. So that is what you're guiding for the full year, around 20 to 22% is what you would be growing at in FY24. What about margins? You have seen an improvement in margins overall. Is this something that will continue? What is the margin picture looking like for FY24?
Yeah, we would do... this quarter, we did a adjusted EBITDA of about 40 crores. When we say adjusted, because these adjustments are one time, they are ESOP and also they are for, fair value adjustment. Otherwise, the reported EBITDA was about 34 crores and a reported PAT was about 12.5 crores. So we would continue growing the same PAT and the revenue at the same 20-21%.
Okay. So getting to your business support services, it contributes about 30% to your top line. It's done well on the revenue front, a 25% revenue growth. But your PBT, the profit before tax, has practically halved on a quarter-on-quarter and on a year-on-year basis. Can you explain the reason why?
Yeah. In the business support services, we have one or two businesses which are very seasonal, dependent on hiring. But however, when we gave the market the valuation, the guidance, we had actually, accounted for it in the sense, we have a business which is an employee background verification in the company called Matrix, where it would, uptick when the hiring happens. So if you look at last year, the hiring did not happen so well, especially with the IT. So hence, there is the downfall. But that is, quite normal, and that's what we've accounted baked in.
How much does this employee verification contribute to your overall top line? And does it largely cater to IT hiring? If that's the case, then it's not improving in the near term. It could be south even in Q3, Q4, for instance.
You're right about it. That's what I said. We have taken a very muted growth for Q2 and 3 and 4, which we knew last year. So that is baked in when we say this 20% growth in both revenue and in PAT, it is all actually accounted for.
Okay. We generally wanted to also understand what the demand scenario is looking like. Is there any sign of slowdown? What are the macros suggesting? Because you are confident of a 22% growth. But is there something on the ground which is worrying?
I wouldn't say it's worrying. It's actually the other way around. Actually, it's looking good for us. Especially our ground handling. We've just been handling last 1 year, one airport, even though we had concession for 5 airports. All the 4 are opening this quarter. So we see a big, growth there. The industry sector where we have big in manufacturing, in the integrated facilities management space, we see a standard growth about there. So I think for us, overall, it looks very good. Infra is doing very well for us. We have won another 14 airports which will open. We have airports like Ayodhya and Tirupati. All that will open this quarter and the next quarter. So the same thing happens with the manufacturing, especially with China Plus One and manufacturing going fast. Our IFM also looks at about 20%. So for us, fairly, it looks very good, at least this year.
So you're guiding for a 20% top line and 20% profit growth, right?
Absolutely.
Okay. Getting back to that ground handling for the airport ground handling business, how much does that contribute to your overall top line today? And how many airports are you going to be servicing in Q2, Q3, Q4? Can you give us that trajectory? And therefore, what would be the revenue bump up as you keep adding these airports?
Right. See, it bump up will be pretty huge because last year we had, almost had no revenue from them. So if this year we take whatever comes as a full bump. So we would hope to do about 40 to 50 crores with about 10 to 12% PAT on that. We will open up, we have already started doing Pune last 1 year now. We have opened up Patna, Vizag, Raipur and Surat this quarter. And the other smaller airports, like even though they're smaller, we see larger potential, like I told you, Tirupati or Ayodhya, which will all happen in the Q3 and Q4. However, we've taken these 5 airports for this year. I think revenue should be close to about 50 odd crores with a fairly good margin, better margin than the other businesses.
You said 10 to 12%. Thank you for joining in. That's updated for you. The company is saying that one aspect of their business, which is employee verification. So every time you onboard an employee, you want to do a police verification, you want to check those documents. That service is done by Updater. Now, because IT hiring is slowed down, that business is slowing. But the good part is it's getting offset by the airport ground handling business because they're adding on, they're servicing more airports. They added Pune, but they've got a big list of airports that they're adding on. And that, according to the company, will drive some revenue in the subsequent quarters.
Okay, all right. That's the word coming in from Updater, looking positive on growth. But for now, we'll slip into a break. When we come back, we'll get you more on the markets and stock-specific action. Stay tuned for that.